So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all the way to help MVPs. My name is Brett Swarts, and each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, where they share their secrets, insights, and wisdom with us so we can all compound and make a bigger impact. Hey, we're also streaming on Capital Gains Tax Solutions podcast and YouTube channel, so we also appreciate everyone watching out there. I'm excited about our next guest. He's out of Massachusetts in the Cape Cod area, and he is here to help us find hidden profits, scale smarter, beat our competitors without the chaos, cash flow, panic that a lot of business owners are facing. In fact, we're talking about solving cash flow overwhelm for business owners. We're going to be diving into some CFO services and business strategy and what you should be looking for in team members or consultants that you're working for. Please welcome to the show with me, Mr. Michael Barbarita. Michael, how are we doing?
Fantastic. Thanks for having me, Brett.
Excellent. For our listeners getting to know you for the first time, would you give them a little bit more about your story and your current focus?
Sure. So all my life, I've owned retail, manufacturing, and service companies. The retail company I owned with some partners, and we grew the company from $2.5 million to $8 million in 5 years, basically utilizing some of the strategies that we're going to talk about today. I then went into the frozen cookie dough business. That's another business that I went into, bought and sold. And then I had a failure. I started an outpatient rehabilitation facility called Freedom Therapy Center. And I thought after having 2 successful exits, I thought I knew everything. And, that's the worst thing that can happen to a business owner, that you think you know it all. And so, it was funny because when I analyzed the whole thing in the aftermath, when I was with the ski business and with the cookie business, I implemented business and financial strategies that my competition wasn't doing. And then in the medical business that I went into, I did exactly what my competition was doing, and I tanked after like 5 years. So I learned a lot, as a result of that. And so that's when I started Next Step CFO, because I just learned so much about success and failure that I thought it was a great opportunity to help other business owners. So that's my story.
Hey, you're best positioned to serve the person you once were or are. And it's great that you've had successes and failures, and so that you can learn and help us to learn and not make the same mistakes. And we're speaking with Michael Barbarita, and you can learn more with him by going to nextstepcfo.net. nextstepcfo.net. Don't say that too fast. But so let's dive right into this, Michael. Okay. So what's the number one secret to solving cash flow overwhelm for the business owner?
Well, I think first of all, you have to understand what the 80-20 rule means in business. And so for us, and when I was doing research for my book as well, I landed on what I call the 7-step pathway to profit formula. And what it is, what it represents is, to me, in business, the 80-20 rule is that 80% of your revenue comes from 20% of what you do every day. A little different from what most people. Now, the 80-20 rule is never wrong. So if you think it's 80% of your revenue comes from 20% of your customers, you're right. So I'm not arguing that. I'm just saying that I think it's more valuable for 80% of your revenue coming from 20% of what you do every day. And so I narrowed that 20% down to 7 steps. One of them is leads. The second one is conversions. The third one is closing rate. Fourth one is client retention, which is very often neglected, by the way, client retention. We all, as business owners, we all like to think that once we get a customer, we get to keep them by default. Not the case. The fifth is average dollar per transaction. Sixth is the frequency of sale. And seventh is you have to control your costs. If a business owner focuses on these 7 things, he's going to drive 80% of his revenue. And it's only 20% of what you do every day that if you could focus on these things, you're not going to have many cash flow problems. I could say that. So, but then we take it a step, each step we take it a step deeper. For example, one of the things that I discovered while doing research for my book, Powerful Business Strategies, which, by the way, is free on my website, is I discovered a formula called the conversion formula. This is a formula that converts prospects into either your sales process or it converts prospects into sales. And it's a 4-step formula. And what I learned is I had to go back to 1931 and understand that the key to successful marketing was getting into the mind of the prospect. Well, that's great, but how do you do that? So what I found is that to get into the mind of a prospect, it centers around 2 emotions. One is the problem the customer has and doesn't want, and 2 is the solution they're looking for they can't find. So based on that, I created this formula called the conversion formula. It's 4 parts. It's going to be done in the exact order. Otherwise, it doesn't work. But it starts with what I call captivate, which is a headline. And that headline has to be the problem that the customer has and doesn't want. Second step of the formula, so that's captivate. Captivate is the headline, which is the problem. The second step is fascinate, which is the solution to the problem that they can't find. So notice the first 2 steps of the formula are what is involved in getting into the mind of the prospect. Captivate the problem, fascinate the solution. Now, the captivate being the headline, that's the first thing that you say or that you see or that a prospect sees when they come in contact with your brand. The subheadline is the solution. That's the second thing they see or that you say when they come in contact with your brand. The third step of the formula is called educate. This is where you educate the customer on why your solution to the problem is superior to the competition. And then finally, you have to close them. And the close has to be what I call a compelling offer. And to not leave, because anybody can say that, I don't want to leave the audience hanging. There's 5 critical components to a compelling offer. The first is urgency and scarcity. Urgency. This offer ends on Friday. And by the way, everybody should have expiration dates on their on all of their offers. They should all have expiration dates. That's urgency. Scarcity is I only have 5 appointments left, or I only have a quantity of 10 units. That's scarcity. So that's the first component of a compelling offer. And one of the beautiful things about all these components is you can combine them, which is great. The second component of a compelling offer is a risk reversal, where the seller in the transaction takes most or all the risk. When I was in the ski business, what we did, and my employees thought I was out of my mind, you see, the problem that the prospect had in the ski business is they really never knew if the ski they were being sold was the right ski for them until they got up on the mountain and checked it out, right? So we had a ski guarantee. Ski the ski 3 times. You don't like it, bring it back for a brand new pair. And as you can imagine, my employees thought I was crazy because a used ski is like a used car. It's, you're driving a car out of a showroom. Once you use the ski, it's all done. So, but the beautiful thing about it is that if you understand skier psychology, all they want is a great experience. That's all they're looking for. They're not looking to put one over on the retailer. We sold 8,000 pair of skis the first year we implemented it, a 25% increase from the year before. Only 8 came back. See, a lot of people think that you're going to get, nailed somehow if you have a risk reversal. It's just not true.
Okay, let me pause there. This is
Yes.
amazing. I'm just going to break down a little bit of what I took some notes on here.
Yes.
You know what the worst thing to do is when you're selling a business? Paying huge capital gains taxes. In fact, they're about 20 to 50% of the sale. And if your client is selling, whether you're a business broker, M&A advisor, financial advisor, they have a large capital gains tax problem. And guess what? We have a solution. We build capital gains tax solutions for sellers of highly appreciated assets, including real estate, including businesses and other assets. And we want to encourage you to take action today to learn about what solutions are available. So think about a business, think about real estate, think about other assets that have at least $1 million net proceeds and $1 million gain, and the sale is going to result in 20 to 50% in tax. So what can you do? Well, you can build a capital gains tax solution with our team. Go to capitalgainstaxsolutions.com or click on the link below to get started.
Yes.
And so it says, first thing is understand that 80% of your profits are coming from 20% of what you do every day, or what your team does every day, right? And so you're going to break it down to these key areas: leads, conversions, close ratio, client retention, average dollar per transaction, frequency of sale, control costs. And then you're going to understand that you have a conversion process you've got to implement, a 4-step formula. I love the way you put that, right? That you need to captivate with the problem the customer has and doesn't want, fascinate, solution to the problem the customer can't find, and then you're going to educate, and then you're going to go for the close. Is that a good summary so far?
That is.
Good. And then you want to add some urgency and some scarcity to your offers, right? And then you want a risk reversal to take off their biggest risk and put the risk on the seller. So this is all making sense. So back to helping to understand the overwhelm of solving for cash flow overwhelm. This is, the league versus the lag, right? And so if I'm hearing you correctly, you're saying, hey, if you can focus on these lead metrics here, leads, conversions, the 7 here, and you can have a closing process and a education process and a conversion process, then the lag will take care of itself. Is this what you're implying, Michael?
That's one step. Yes.
Okay.
There's the CFO technical side to this, which I have to get into because of the background that I have as a CFO.
But pause before you go into that for a second.
Yeah.
I do want to focus on these 7 things, because I think people could say, I know my leads, right? Or I know I can focus on getting more leads. And I understand conversions, that's sales. And then I understand I can do my closing ratio, but maybe they think they understand it, but they really don't. So when you're going into this and you're walking an entrepreneur or business owner through this, what's the, either the one that they miss the most or that's the lowest hanging fruit that you say, hey, if you just did these actions in this order, it's going to become much easier for these seven things.
Okay, so one of the things that we do is we look at the way they promote now. Okay, the way the money they're spending, the money they're not, it's okay. The money they're not spending, the networking, whatever it is that they're doing to generate leads, and we implement the conversion formula into that process. Okay, but in order to find the problem that the customer has they don't want, it's not that easy. It's usually a problem with the industry, by the way, Brett. It's usually the problem. For example, in the construction business, the problem the customer usually centers around getting return calls, arriving on the day that they say they're going to arriving on time on the day they say they're going to arrive, not making a mess of the house. These are problems that customers have in that specific industry. And so what the business owner needs to do is he needs to address these problems head on with his solutions. And some of them may result in risk reversals where, look, if we don't arrive on time, I'm going to take 10% off the contract price. That type of thing. And so what we do is we implement the conversion formula in order for those business owners to get the prospects to convert. And that's one of the critical components that we start out with to get to the conversions. So then, at that point in time, we talk about things like the 5 components of a compelling offer. By the way, adding more value was number 3. Adding more value to your product or service. Bundling and packaging was number 4. And number 5 is indifference to the outcome. Toughest one to do, because everybody's connected to the outcome. And what happens is when you're connected to the outcome, the prospect can feel it, and they know that you're out for yourself and not for them. So that's so after the conversion formula, we go through the components of a compelling offer so that we can increase those conversions and closing rates.
Excellent.
Then we,
Okay.
yeah,
Keep going.
then we go into client retention, and some of the things that we do for client retention is drip campaigns to existing base. This solves 2 problems. One, it gives it reinforces with education. By the way, it reinforces the customer, the clients that you have, that you know what you're doing. It also does some suggestive selling by offering. If you're, once again, I'll pick on the construction business. If you did a kitchen, maybe they need a bath remodel, or a mudroom, or a deck, and these are the things that you would add, you would incorporate into a drip campaign and client communication. So the other thing that you do for clients is you just go back to them. I mean, for example, my most successful construction clients, and I'm not picking on that industry. It's just an industry that there's a lot of different industries that I deal with, but that happens to be one. If you offer a 5-year warranty, you get to go back to the client, to the property. You know what I'm saying? So if one of my clients, for example, he has a 5-year warranty. 6 months after the job, he's back at the property to just check in and make sure that all is well. And usually all is well, except they need something else. So it's just another way to retain clients.
Okay, can we call that? So,
Yeah.
so in other words, don't turn off the email sequencing or the education sequencing just because the client is now closed. Make sure you're still continuing to do a drip educational email campaign to them, and do some suggestive solutions that makes sense. That could be related. That what's the next thing they're going to need, or if they did this, they're probably going to need this, and also have just a standard check-in, right? Hey, it's just an automatic check-in, which can obviously lead to good conversations. And yeah, I know at times, Michael, when I'll call a client and I'm talking about something, and that's like, oh, yeah, and this thing comes up, right? Naturally comes up. And so it's almost like write down those things that are naturally coming up during the next phases, create an email sequence like that, and once every 2 weeks, once every month. What's a good cadence for client retention emails?
I like once every 2 weeks.
Okay.
And you'd be surprised, Brett, how many people don't use the drip campaign. And another benefit of it is sometimes a client hasn't done business with you in 5 or 6 years, but they know and trust you, and so it's just an excellent opportunity. There's so much revenue being lost in your existing database. It's not even funny. Mm-hmm. And this once again enhances cash flow.
Yeah, I think a lot of it's just top of mind, and they just can remember, and you're being thoughtful, and you're thinking about them, and you're looking for ways to serve them, and yeah, once every 2 weeks, say something out there, and okay, keep going. So what's the next step on client retention, or the next step that you want to talk about?
Yeah, so the next step is average dollar per sale, and this is another opportunity lost. According to the research that I did, 34% of prospects will buy something at the point of sale if they're asked. So, for example, you sold somebody something. There's a 34% chance they'll buy something else if you just present it.
Give us an example. What do you mean by that?
Okay, so let's say I'll go back to the construction business. So if in fact somebody just signed a contract to redo a kitchen, you can suggest, I noticed that you don't have a deck. Is that something that we can help you with? That's an example. So there's a 34% chance they're going to say yes because they already are in the mood, so to speak. They've already bought something for you and they're already in the mood. So that's how to increase the average dollar per sale. You can also do upsells, downsells, and cross sells. So if you have a service that's of higher value, you all should offer that. If the person is price sensitive, you should be ready with a downsell to be able to sell them something at a lower price, but still one of your products. If you're not armed with an upsell and a downsell, you're missing out on an opportunity.
Okay, that makes sense. Okay, let's keep going here. So that's
average dollar increase.
Yes, average dollar. Got it.
Another thing on average dollar increase is packaging and bundling.
Okay.
As I mentioned, that's one of the five components of a compelling offer. It's good to have a bundle. When I was in the ski business, we used to bundle. Everybody used to bundle skis, pinings, and poles. But what we did is we took the most popular ski graphics, went to the clothing department, and bundled a hat, parka, pant, and sweater combination. Once they bought the skis with the most popular graphics, we could show them the matching clothing. It was like almost an automatic sale, and it was bundled and packaged together, so it was more compelling. So bundling and packaging, very important.
Awesome. Hopefully you got like the Wells Waldo outfits, right? And then you got like 10 guys going down the slope looking like Waldo, you know?
Right.
I think that's good. That's good. Okay, great. Let's keep going. What's the next one here?
Okay, so frequency of sale. That also goes back, in addition to client retention, that also goes back to going back to your client database and picking up some of those clients that haven't bought in a while and refreshing them to your services and giving them ideas, suggestive selling ideas, and so forth. So the frequency of sale is critical. And by the way, you can also, frequency of sale also includes creating complementary products to what you already have and what people already bought. So that's another component of frequency of sale.
I think that's great. By the way, I also would encourage people to encourage their clients to create testimonials, either by Google reviews, 5-star Google reviews, and or for us, it's a little more specialized. What we do for exit planning for people exiting large businesses in real estate, Bitcoin, and deferring tax, we'd have testimonial videos for 30 minutes where they share their story about their entrepreneurial journey or their investment journey and their problem with the tax, and then becoming fascinated with what we do, and then the education process of how they understood it, and then how they end up using our service and what the outcome has been. And those are the most powerful, because I think what 80% of people will buy based upon personal brand and just client testimonials are the highest reason someone's going to buy. So talk about just that, like what are great ways to make sure that you're capturing and having a referral, either a system and or a 5-star review system.
Okay, so you have to ask. That's number one. All right, kind of basic, but people forget that. One of the things that I recommend to my clients, and you can't do it in every industry, but when somebody gives you a positive review, ask them permission if they could use that review. Even though it's in the public domain, sometimes it's better to ask if you can use that review. And what you do is you send it to 20 neighbors of that, 20 or 30 neighbors of that customer. And let's say that customer's name is Sally. So you've just put, look what Sally said about her new boo-boo-boo. And you send that out to 20 prospects. And then that's how you pick up clients, and then you ask them for a review. So it kind of has this, it kind of incorporates a lot of things at once. But reputation management is definitely a critical component of being in business, and especially in a lot of the businesses I serve. But it really comes down to the ability to ask. When my clients increase their reviews dramatically. I mean, it's like magic, right? If you just simply ask, and you get it.
I think that's great, and create. I think even a drip campaign for that as well, right? And you might do it 30 days or 60 days after the sale. That automatically just states, hey, would you be open to a review? Would you be open to, and then maybe 90 days out or 100 days out, would you be open to sharing a video review, right? And have it just set up in this sequence, and so that those that raise their hand are, and those that aren't, that's okay too. But it's
right.
set it and it's automated. Okay, great. What's the next one here, Michael, to talk about?
Controlling costs. So the interesting thing is that if a business owner really took real careful look at their costs, there are things like subscriptions that they don't use anymore. There are areas that if they really looked at each line item, because that's what we do with clients, if they look at each line item, they could say, you know what, I think we can cut that. And basically what I do with clients is I go through every line item and I say, why do you have that? In other words, does it bring in a customer? Does it keep a customer? Does it increase the long-term value of a customer? And does it deliver the product or service to the customer? Other than that, you just skip it. If those four components are no, then you can cut the cost. It's that simple. So there's a lot of costs that a business owner incurs that when he really thinks about it, he can get rid of it now. Meaning it's something that was important at a certain point in time, but whatever it was that was making it important isn't taking place anymore. But he's still paying for it, he or she. And so that's another thing that we find, that if business owners really looked at every line item and asked themselves those four questions, I think that it'll go a long way for them to optimize their costs.
We're speaking with Michael Barbarita, everybody, solving cash flow overwhelm by focusing on the lead measures, not the lag. The cash flow overwhelm is not the problem. The problem is you're not solving for these 7 things that you should be doing, your team should be doing, and creating systems and processes around them, including frequency in sale, including controlling costs and leads and conversion rates and client retention and average dollar per transaction. You can go to nextstepcfo.net to learn more about Michael's services, nextstepcfo.net to learn more. Okay, what haven't I asked you so far, Michael, that you want to make sure we cover?
Well, the nerdy things. Let me explain what I mean by that, because I'm a financial nerd, right? So I gotta. So, from a cash flow standpoint, what I find often is that people aren't sending out statements on their receivables. They're not sending out statements. They're not following up with late receivables. They're avoiding the fact that they have to make calls, and they don't have to make them. Somebody on their team can make them. But what I find is that sometimes I could pick up as much as $200,000 in 2 weeks if they would just focus on sending out statements, following up with late pays, with customers who are late, and paying attention to their receivables. That's one. Also, I find that there's clients and business owners have this little thing about paying their bills so fast. I got to get my bills out of the way. Boom, 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 boom. That's not the right way to preserve cash flow. So, definitely take your discounts, but if the discounts aren't offered, just pay on the due date. Don't pay right away. I see a lot of clients just paying right away, and it's eating up their cash flow. So these are the nerdy things, by the way, Brett, that business owners forget about. A lot of business owners too have cash flow problems because of inventory, of just overbuying inventory. I find it even in the trades where they'll overbuy supplies. They don't need them yet, and they overbuy them, and that impacts their cash position. So there's a lot of little things like that from a financial standpoint that they have to take care of if they're going to preserve cash.
Okay, that makes sense. Anything else on the CFO services and the things that you help to clarify and provide for business owners?
Well, one of the things that we do is we do cash flow forecasting. So we're able to tell you when it's cloudy, not when it's raining. And it's very helpful for business owners to really understand what their cash flow is like, and if they're going to need extra cash, how about how to go about getting it. So, there's that component as well. There's the forecasting, there's identifying the critical metrics in the business, and there's also the cash flow component.
Okay, let's talk about someone who wants to work with you. Like, okay, Michael's the guy. I can tell he's got the experience, he's got the scars, he's got the all of the systems. What does it look like for someone who wants to work with you, Michael? Maybe talk about a recent success story.
Okay, so here's one. So I had a client who was losing $250,000. And in 1 year, we turned it around to a $50,000 profit. They got to sell their business, which was what their goal was, right after that. So
now, real quick, when they sold the business, did they have capital gains tax?
They did. They did. Yes, they did. But it wasn't that much.
Okay, all right. Well, let's imagine it was. Let's imagine it was. Yeah. This is a little plug for what we do, and I'm also kind of curious. There's those who help to build the business to get it in a healthy spot, like you did for that client, to be able to sell. Well, here's where I found most entrepreneurs, they don't have a team in place to help them build capital gains tax solution for their capital gains tax problem, right? And they wait to the last minute, and then they're just either not aware or don't have a plan or a team, and they just sell it and just pay this massive tax. And so we, like example, we did a $13 million business exit out of San Diego, just did a large CPA firm exit just a few months ago. And so business owners, real estate, we build trust, Michael, to receive the capital in exchange for a promissory note. And we do it all within about a 30, 60, 90 day before closing. And it keeps an extra 20, 30, 50% working for these families to be able to invest into new businesses or just to diversify and live off the cash flow. But I'm curious, when you sold your businesses or the others who have sold it, what's been your biggest frustration with capital gains tax?
Well, paying it. But certainly, I think that, most of the time they're scrambling to find a 1031 exchange of some sort, or some type of way some type of thing to reinvest very quickly to get out of it. But no, it's definitely been a frustration, I think, for a lot of businesses.
Yeah, people want to learn more how to eliminate the need for the 1031 exchange. You can go to capitalgainstaxsolutions.com, capitalgainstaxsolutions.com. As a reminder, 1031s don't work for business sales anymore, but they do work for investment real estate. But we do have a solution that works for businesses, Bitcoin, real estate. You go to capitalgainstaxsolutions.com or find us on YouTube, Capital Gains Tax Solutions. Build your plan today, unless the government is going to take 20, 30, 40, 50%. capitalgainstaxsolutions.com. Okay, awesome.
Excellent.
Go ahead. Let's keep going. Let's keep going on what we were talking about here. So I had that little window there of opportunity when you're saying selling, and I gotta.
No, that's right. That is a frustration. It's a huge frustration. A lot of business owners don't think about the tax consequences. Mm-hmm. That's the biggest problem.
Exactly.
And they don't think about it. Then all of a sudden, that day of reckoning comes, and it's like, whoa. Everybody should get a tax projection before they sell their business. That's first and foremost.
Mm-hmm. Exactly. So let's keep going. So you said, you were saying, the receivables, make sure you collect it for receivables, right? And then people working with you, I'm sorry, and how they can work with you. And this is a success story. So you're turning them around, helping them to get in a positive cash flow situation, helping them to exit their business. And then what other ways are people working with you?
Well, we one of the things that we do as a CFO, a fractional CFO, if you were to get a job as a CFO in a Fortune 500 company, you would have to understand business strategy. For whatever reason, most fractional CFOs get away with that component. We don't. So in addition to the financial side and understanding cash flow, critical metrics in the business, doing the forecasting, helping you with bank loans, all that kind of stuff, we also help you with business strategy. Implementing strategies that your competition isn't doing, like the conversion formula, like the 5 components of a compelling offer, like understanding packaging and bundling, the drip campaigns for client retention and for increasing the average transaction value. So we get into that side of it as well, which is really what I found, Brett, is that there's only so far, you can only go so far with the numbers. The business owner wants to know, okay, I'm doing well, I'm doing this, I'm doing that from a financial standpoint. How can I grow? How can I scale? How can I get bigger? And so that's where the strategy comes in.
Excellent. We're running out of time. You ready for the lightning round?
All right, go for it.
All right, Michael, knowing what you know now, if you go back to your 20-year-old self, what's the one golden nugget make sure you tell yourself to do?
Implement business and financial strategies that your competition isn't doing.
Excellent. Question number 2, what's the number 1 book you've recommended the most in the past year?
Powerful Business Strategies by Michael Barbarita and Shuki Obio.
Excellent. Question number 3, what are you most curious about right now?
AI.
What tool are you using the most in AI right now?
Claude.
What's the number 1 leadership quote or theme that you strive to live by?
Boy, that's a good one. It's at the tip of my tongue, but I can't think of it.
It could be a theme. It doesn't have to be an exact quote.
Yeah.
It could be a core value. It could be really anything. It's all right.
Oh, honesty.
Okay, excellent. And very last question, Michael, and we'll wrap it up. I so appreciate your wisdom and your insight today. And this has been a dynamic, value-added podcast for our listeners and viewers. And so we'll end with this. After all your success, helping all the people you've helped, how do you best keep a mindset of stewardship over ownership?
That's a great question. I think in terms of, I think you have to really pay attention to your team and your culture. I think that's the critical components to the stewardship, and the fact that you're a trustee. You got to think like a trustee. That you're responsible for not just your own financial well-being, but for the financial well-being of many, many others on your team.
So good, Michael. I want to just, again, thank you for being on the show. And for our listeners who want to get in touch with you one last time, what's the best place for them to find you?
nextstepcfo.net. And on our website, you can download our book, Powerful Business Strategies, for free. And you can also take a 5-minute diagnostic, which is going to identify 3 business strategies that your competition isn't doing and the financial impact specifically for your business.
Amazing. Thank you, Michael. I also want to thank all of our listeners or viewers for being a part of the Build It to Billions podcast, also streamed on Capital Gains Tax Solutions podcast and YouTube channels. Hey, we're on this journey with you to scale it from millions to billions so we can give more all of it to help MVPs, the most vulnerable people. My name is Brett Swarts. I want to encourage you to take action today. Man, if you haven't hired the who like a Michael to help you, consider it today. And if you have a large exit, businesses, Bitcoin, real estate, stock, multiple millions in gains, we want to encourage you to build a Capital Gains Tax Solutions solution with our team here at Capital Gains Tax Solutions. Just go to capitalgainstaxsolutions.com to learn more. Don't get caught not being prepared and planning. Go to capitalgainstaxsolutions.com. I'm Brett Swarts. I appreciate everyone listening and watching again. We'll talk to you soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.